let's also kickstart the show, start taking all of your stock-related queries. Before we do that, viewers, the number that you can write to us at is going to be flashing on the top of your screens. There you have it, and on your screens. Do remember to mention the buy price for the stocks that you're already invested in, and for the ones that you hope to be investing in, also mention the time horizon that you then have in mind so that we can help you answer your queries better. But with that, let's also kickstart the show. Of course, we have Gaurang Shah, who's the Senior Vice President at Geojit Financial Services, joining us, and Kunal Bothra in the studio. Firstly, thank you so much and good morning. And firstly, I wanted to come to you, Kunal, with the first query that we have coming in from Ignatius, who's writing to us from Calcutta. Wants to know about ABB actually, because he's invested at a very elevated price, 10 stocks, 10 shares in fact, bought at 7,500 rupees. He wants to know if he can at this point book a loss, switch to Glenmark Pharma instead. What do you make of this?
Very good morning to all of you. So yeah, I think ABB is a good stock where I would suggest that you should hold on to the name, and especially with the point that the stock has fallen from 8,500 short levels to now 5,000, 5,200 where it's trading right now. There could be a possibility that the stock may drift lower, say by another 200 to 250 odd points, try and come back to that sub 5,000 mark. But I believe that if you're a long-term investor, then I would suggest that you should hold on to this name. These are good, strong stocks which have done reasonably well over the last 10 years and more. And I think buying these stocks at a 40% to 50% kind of a correction broadly from their lifetime high levels, I think generally turns out to be a good opportunity for a long-term investor. So I would suggest a hold, but I think sub 5,000 mark could be a good opportunity where you can look to even chip in further.
Right, Kunal, I'll stick with you because there's a question on the technicals. This is Satya Prakash is writing from Bangalore, and he's asking, he's bought Exide Industries at 325 rupees a share. He wants to know what does the chart look like for Exide now. As I can see, Exide has been in a corrective phase for the last 6 months. From here on, what are the prospects for Exide?
So yeah, corrective phase for the last 6 months, but I think in mid of 2024, there was this very strong rally for Exide where the stock, I think in a matter of 1 quarter, moved from 300 to almost 600, 620 plus levels. So right now in this last 4, 5, 3 quarters, after that strong up move, the stock is just going through a mean reversion phase. That I believe, is generally turns out to be a very good, excellent opportunity for stocks on the long-term charts. I think if you've bought at 325-ish odd levels, you should continue to hold on. What's also exciting about the charts for Exide is on the short-term basis, the last 2 months specifically, the stock is seemingly forming a double bottom at this 340, 350 zone. That could also help the prospects for Exide over the near term. I would suggest a hold.
Alright, that's a whole recommendation coming in as far as Exide Industries is concerned. Gaurang, the next one that we actually have is coming in from Ravi, who's writing to us from Pune. He wants to know about Eicher Motors because he has 25 shares that he's been holding on to from 2022, and he's said that he's sitting at 95% profit when it comes to this stock. He wants to know if he should book profits, move to M&M or Bajaj Auto for that matter. What do you think?
Well, first of all, thank you very much for having me on the show, and morning to all of you all. If I heard you right, you said 95%. Did I hear that right?
What he said, that's correct.
So, I mean, you invest in stock market, so you make money. And when you're making this kind of money, you should always introspect in terms of how much more do you want, because your wants and desires and greed are not going to stop. Stock market has its own limitation in giving returns. It has created wealth for long-term disciplined investors. First of all, let me give a prudent disclosure. We are maintaining a hold on Eicher Motors. Our targets are somewhere close to about 5,230. Currently, the stock is trading at 4,700 or thereabouts. 95% profit, deep in money. My first advice is that hold on to your investments because we expect the company, Eicher Motors, to do well. There was a lot of fear in the street when Hero MotoCorp and Bajaj Auto launched a competitor vehicles, two-wheelers, against Royal Enfield motorcycles. But I think the company has done well, even though the competition was very stiff. The numbers are very good. At these levels of somewhere close to about 5,230, you can rethink your strategy. But since you are deep in the money, no harm holding on to it, but also introspect as to how much profits you want to make from your investments.
All right, that's the view coming in from Gaurang on Eicher Motors. But Gaurang, I'll stick to you. This is Nikhil Sharma's writing from Mumbai. He's saying that he has 5 shares for HAL at a price of 3,710 rupees per share. Now, he feels that he's actually sitting at a loss right now. So, he wants to know if he should book profits now or he should hold on to it for a longer period of time. His view or your view on HAL.
Well, so we used to cover the stock. First, a prudent disclosure, we had covered it during the IPO some time back. And then we did maintain a positive stance on Hindustan Aeronautics Limited. Currently, we don't have coverage, so I won't give a specific comment on HAL. But I would love to say that this is one of the strongest defense-related plays in India after the Make in India and Made in India. Tejas got commissioned into the Indian Air Force. Companies working for the next generation aircraft, Tejas Mk1 and Tejas Mk2. There is an issue with respect to supply of engines as far as USG is concerned, but that resolution should come through. Generally, when you invest in defense-related stocks, your time horizon has to be 3 years, 5 years, as much as longer as possible to make the most out of your investment. Because these stocks had run up 100, 150, 200% in the last year and a half, 2 years, they are in a consolidation zone. But the entire defense sector looks very exciting to us.
The defense space is what is looking attractive to Gaurang, then that's the take coming in as far as that particular pack is concerned. But time for a very quick breather on the show. When we come back, we'll continue taking all of your stock-related queries, so don't go anywhere.
Welcome back to Motilal Oswal studio with me, Ankita Saxena, and with me is Shreyansi. And let's get started with all the queries then. Yet again, Gaurang, this one's for you. This guy, Gaurav, writes from Bangalore. He has 1,000 shares of Jio at 315 rupees per share and 1,000 shares of BEL at 270 rupees. Now, as I can see, Gaurang, both these stocks have been correcting, for the last 6 months. He wants to know, what does he do with these counters? Is he supposed to hold them, or should he be selling it at this juncture?
So I believe you said Jio Financial Services and Paytm. If I heard that right, then as a disclosure on Jio Financial Services.
No, he said BEL.
BEL.
BEL, yes.
Okay. Bharat Electronics Limited. This is one stock amongst the PSU defense plays which has suffered the selling pressure on a larger side. If you look at the third quarter earnings and the order book capability, capacity, experience of the company to execute the order book, it's at the pinnacle of everything. We are maintaining a positive stance on BEL. I think the risk-reward ratio is extremely favorable for long-term investors. If somebody wants to make a fresh investments, we would definitely recommend that. As a disclosure, this morning itself in our YouTube channel Geojit Spotlight, we have recommended BEL. That's a disclosure from my side. Targets that we have kept for BEL is 335. In case if the earnings improve and the order book execution picks up speed, these targets would get revised upwards. The next one, I believe, was Jio Financial Services. This is also one of the stock which, after seeing a dream run from 200 to 40 levels to almost about 350 plus levels, is currently again back to the level from where it started, upwards trajectory. We have coverage over there as well. That's a prudent disclosure from my side. Close to 350 approximately is the target from a long-term point of view on Jio Financial Services.
And that's a take coming in as far as BEL and Jio Financial Services are concerned. Tell you what, Kunal, I'll come to you next because Satya is writing to us about a couple of counters, Uno Minda as well as Motherson Sumi Wiring. And he's been holding on to both of these counters since the last year. And he wants to know if he should be switching to M&M. Now, we've talked about M&M previously, but what do you make of both of these counters at this point?
So Uno Minda, I think that's a chart which on the short-term basis is starting to come back into a bit of a support territory. I would not say that the correction is over for the stock, but it looks like that 850, 860 levels thereabout over the last 2 months specifically, the stock has managed to bounce off quite strongly from those levels. The first bounce which happened for Uno Minda was from 860 levels to almost 1050, 1060 mark. So I'm expecting that maybe this time around the stock could probably exhibit a very similar kind of a chart structure. What you need to wait out for is a confirmation of a break, say about the 900 levels. Whenever the stock breaks past about 900 mark, say in the next few days, if that happens, that could reconfirm the point that the stock has formed a base at this 840, 850 zone, and that's where I think you could look for a more of a trading bounce. For Motherson, I think that's a chart which over the very short term has gone through a very sharp correction, but doesn't look like that the stock is going into any kind of a major resurrective mode as of now. Would suggest an avoid.
All right, that's the view on M&M and Motherson Sumi. But coming to you, Gaurang, this is Siddharth who's writing from Kolkata. He says that he has 60 shares of NMDC Steel at 37 rupees per share, and he wants to know the outlook. He's a long-term investor. He wants to know the long-term outlook for NMDC.
Well, so on NMDC Steel, unfortunately, we don't have a coverage, but we have coverage on NMDC Limited. Well, let me give a view on the metal pack. Thanks to whatever news flows comes in from China, and of course the tariffs as far as US tariffs are concerned on aluminum and steel products, 25%. The entire metal pack has been beaten down black and blue. Overhang can remain from a short to medium term point of view for related companies, which will have its impact because of the 25% tariff from US. But long-term domestic market looks quite strong in terms of consumption, and there is a likely possibility of price revision upwards for flat and long products, along with HR and CR coils. But it's going to be a challenging time for the entire metal pack in terms of earning visibility also.
Coming in as far as NMDC Steel is concerned, but Kunal, I'll tell you what, I'll come right back to you with that as well. What you're looking at on the charts when it comes to this counter?
I think NMDC Steel has fallen very sharply. I remember, I think from 75, 80 odd levels, it's come back to almost 35, 36 odd mark. But doesn't look like that the stock is going through any kind of an immediate recovery. No major signs that the stock has formed a base. Indicators are not yet into a reversal territory because of the very slow and a gradual correction for the stock. In such scenarios, we ideally wait for the first confirmation of a breakout. That level for NMDC Steel is around the 42 mark. And I think once the stock breaks about those 40, 42 kind of a barrier, say for few days or in terms of high volumes, once we see those kind of patterns, that's where we can probably attribute that maybe the stock has formed a bottom.
All right, that's NMDC on the charts. But Gaurang, I'll come to you. This is Deepak who's writing from Mumbai. He says that he holds Zen Technologies and he wants to know why Zen Tech falling, because I mean I can see it's locked in the lower circuit as of today. Also, it's down almost 20%. Last 6 months also it has been correcting almost 36 odd %. He wants to know the reason why Zen Tech is falling, and he wants to know whether he should hold it or he should really sell Zen Technologies and cash out right now.
I think the entire metal pack has been on the sell side, and not only Zen Tech, but markets have also fallen, and they have fallen quite bad, especially for the last 9 days. But good to see the markets holding out 22,800. This is the fourth time in the last 3 weeks that the Nifty spot has broken 22,800. But for the last 3 times, we have given a close above that. Today, I hope we give a close about 22,800. This will possibly prove the strength of the sacrosanct 22,800 level on the Nifty spot. As far as Zen Tech is concerned, we don't have any specific coverage, so I really won't be able to help the investor in reasoning out the fall. But I can say this, that markets have fallen and so has IT stock.
And that's a take coming in as far as Zen Technologies is concerned. The next one, Kunal, that we have is coming in from Subramanian, writing to us from Chennai. He in fact wants to know about GIC RE for the short term. What do you make of this? And before I come to you, Kunal, of course, the number that you can write to us at, viewers, is flashing on the top of your screens. Do remember to mention the buy price and also the time horizon for the stocks that you're invested in. Kunal.
So GIC RE, a stock which I think had a very strong rally in the month of November, December, when it had moved up to that 500 mark. But post that, it's just corrected like any other mid-cap name, from those highs by a margin of 30% broadly, from 500 levels to now 350, 360 thereabouts. It looks like that the stock is coming back into a strong support territory on the charts. So for example, on the longer term basis, 325 to 345 has been a major support for the stock. Like in the previous leg, for example, in the month of November, as mentioned, the stock from 350 levels thereabout moved towards 500 plus. In the previous leg, start the year 2024, the the stock moved from 325-30 levels to almost 420-430 mark. So which means time and again this band of 325 to 345 has been acting as a major support for GIC RE. So I would suggest that if in case the stock happens to come back to that zone, that could actually offer a good buying opportunity where you can look to add or maybe buy the stock.
All right, with that, it's time for a quick breather. You don't go anywhere. After the break, we'll come back and answer all your stock-related queries. Stay tuned.
Welcome back. Thank you so much for staying tuned in. Well, let's continue taking all of your stock-related queries. The next one, in fact, that we have Gaurang is coming in for you from Hardik, who's actually mentioned that he's a very big fan of yours. He, in fact, wants your opinion coming in on rural recovery. Then he wants to know if you have any stocks in mind when it comes to this entire theme.
First of all, thank you very much for those kind words. The recovery in rural will have a huge positive impact, according to us at Geojit, on FMCG sector, on entry and mid-sized two-wheelers, white goods, consumer durables, and the related sectors. So if I have to pick investment, and more importantly, let me just elaborate a little bit more since he's asked me, and a very prudent question over here. The recovery will only not come from semi-urban or rural India, but it will also contribute from metros, tier 2, tier 3 cities, especially after the change in tax structure for individuals by the Honorable Finance Minister Srimati Nirmala Sitharamanji during this budget. Third quarter, new financial year. That means 1st April 2025, new financial year, third quarter, October, November, December. You will see the positivities of these tax cuts or the relief given by the government to a common man start contributing to the consumption, and then of course capex, etc., etc. Themes that we would possibly look at with rural consumption picking up, and of course government has done a lot for the agri sector also. So FMCG, consumer durables, and of course two-wheelers, entry-level, mid-size, or even entry-level four-wheelers. So TVS Motors would be the one auto-related stock that I would want to highlight. As far as FMCG is concerned, I think ITC stands quite credible in terms of long-term investments. In terms of white goods, consumer durables, or even rural place, Symphony for consumer durables, because they are one of the largest coolers manufacturing company, and they have also come out with some upgraded products. So Symphony would be the one from the consumer durable space that will be positive one.
Right. Gaurang, the second question is also for you. Akshay is writing from Bengaluru. He's saying he holds SBI Card from the last 5 years. He's been holding it. He bought it at a price of 150 rupees per share, and he hasn't had any return since then. He wants you to suggest whether he should exit or and where should he really put in that money once he cashes out.
Well, honestly, we did have a positive coverage on SBI cards, but we were concerned with the disappointing set of earnings that they delivered, and hence, that being a big concern, we changed our buy-side recommendation on SBI cards to reduce or sell. You given 5 years to your investment, I think you should have taken appropriate steps much earlier. Nevertheless, better late than never. If you really want to come out of SBI cards, and we would recommend that since we have a reduced recommendation, I will give you, possibly I can recommend 2 investment themes. First one will be, and with this capital that he gets after exiting SBI cards, look at Tata Power from power generation, transmission, and of course, the big push as far as clean and green energy is concerned. So that would be the first one. And second one would be Zomato. After fantastic run-up, it corrected. There were concerns in the Q3 earnings because they are investing a large part in capex, 2,000 dark stores by the end of this calendar year, December 2025. Valuation-wise, it's looking very attractive, and in terms of performance, we believe this should perform. Or else you can possibly pick something like an Ashok Leyland, again from an auto space. Disclosure, we have recommended this stock this morning in our YouTube channel, Geojit Spotlight. Numbers were very good for Ashok Leyland as well.
That's a take coming in on a host of counters from Ashok Leyland to Zomato. And speaking of Zomato, then Kunal, I just wanted to quickly get your take before we move on to the next query about how it's looking on the charts then.
So I would expect Zomato to actually come into a corrective phase further. So you remember, I think the stock post results went into a selling spree from 250 or 60 thereabouts. The stock moved to almost 205. From 205, it bounced back towards 220 to 30 kind of a price territory, and now it's back to that 215 kind of a level. My sense is that in this leg of the price trend, maybe over the next few weeks, I would expect the stock to break the levels of 200 also. So if you're looking to buy the stock, I would suggest just wait out for some more time, because ideally in such kind of scenarios when stocks fall on such heavy news flow and then bounces back, we generally expect that the stock forms an immediate bottom, but the bottom generally gets formed when stocks break below their previous lows and drop by a margin of at least 5% to 7% further. So I would suggest that sub 200 is where you can look to start buying, say closer to 190 to 185 kind of a territory.
All right, that's the technical view on Zomato. But Gaurang, you have a question which is on everyone's mind actually. Ashwin is writing from Mumbai. He says that the markets have fallen considerably. In fact, we are at an all-time low. Is this the right time to average? What's your overall view on the market? Is there more downside to the market? And also, he wants to know that one sector where you see value right now, or perhaps that has corrected fair bit, and you see value in that sector now.
I think I'll leave the levels and timing to my good friend Kunal Bothra, because he's the technical expert. But if you ask me whatever little bit technicals that I know of, I think the levels that we were this morning and earlier, 3 weeks back, 22,800. This was broken the fourth time today in the last 3 weeks approximately. Earlier 3 times, the day we broke 22,800, we gave a close above that. Today is going to be an acid test, because we are very close to that 22,800 mark. We are at 22,825. If we give a close below this 22,800, I think a downside open up to maybe 22,600 or 22,500. But if we are able to recoup 22,800, then I think we should stay afloat for the time being. A lot depends upon global issues that we are facing right now. Let me say one thing. Domestically, there has been no such negativities. It is only because of the tariffs, the relentless FI selling, and certain other news flows that have kept the markets, especially the emerging markets and Indian markets, under pressure. Whether it is a good time to average, well, friend, it all depends upon what investment you have. But in averaging also, according to me, there is a principle, a discipline. Don't average 100% at minor corrections. At least wait for 5 to 10% correction from an initial investment price. If you get that, then average 25-30%, provided you have invested in sound fundamental stocks. Don't average on weak stocks. And for a principle, if you're a trader, you are a trader. And if you're an investor, you are an investor. Don't become a compelled investor because your trading positions have gone into loss. That's the biggest mistakes that a lot of people do.
Looks like Gaurang is almost suggesting that you need to pick a boat to keep your feet on unless you sort of want to drown at this point. That's the take coming in as far as investing strategies are concerned. But Kunal, I'll tell you what, I'll come right back to you and to our very good friend Kunal. Kunal, tell us what are the levels that you're looking at then?
Yeah, so I think Gaurang has tossed the more difficult part of the question. Thank you so much for that, Gaurang. But for the index levels, I agree, I think, to what Gaurang said, that largely this is the third or the fourth attempt towards the index breaking below the 22,800 mark. This is a very important, crucial test, fourth test. Luckily for the last 3 attempts, we saw the index just about getting into a very tepid kind of a bounce. But this time around, I think what we need to see is that if the fourth time we manage to hold on to that 22,800 mark, then we could be expecting the mid caps and small caps to also get into a recovery. But then I think what matters over here is to look at the 2 distinct ends of the market, and that's I think which has been playing out very well over the last few weeks. One, for example, is that the beaten down stocks, the ones which have been already at their 52-week lows or maybe more than that, they are the ones which are seeing consistent falling. But then there is a second group of stocks which have been relatively very strong and where there's been a higher degree of outperformance. Large cap names, for example, like Bajaj Finance, Finserv, Kotak Bank, etc. There are many large cap stocks which have managed to shield themselves from the major part of the market correction. These are the kind of stocks which I believe could probably hold on to their larger uptrend, and these are the kind of stocks which would resurrect as well as recover first and come back to their respective highs whenever the markets come back into a recovery mode. So I think you have to try and allocate your capital. You have to try and look at re-strategizing, because earlier what happened was in 2024, major part of the stocks like the mid caps and small caps and high beta stocks, they moved up higher. They may not be the first ones to try and recover, and that's generally the sector change and the mood change which we see in markets whenever there is a bear market or a bearish kind of a phase which happens. So don't be in a hurry to try and buy the stocks which were bellwethers of the previous leg of the price rally. Look out for new strategies and new stocks which may start to participate as well as lead this kind of a market rally.
All right, point well made, Kunal. Look out for new strategies instead of looking at all the bellwethers of the last leg of rally. But Gaurang, I'll come to you. This is a senior citizen, a lady called Mahalakshmi is writing from Hyderabad. She says that she's holding 75 shares of ABB and she's bought it at an average price of 5,780 rupees. And she has been accumulating this stock since 2022 and she's been averaging in slowly. And now she wants to know that if she should hold this for the long term or what should be her strategy with the ABB.
So I think first of all, you are a senior citizen. You need to be very clear that investment into equity market is exposed to all kind of risks, locally as well as globally. Equity market investments or mutual fund related equity investments are high risk, high return. So you should be prepared to accept the high volatility and digest it. But if you have invested in good, strong fundamental stocks, then the markets have given you returns over a longer period of time. Cap goods engineering sector has suffered off lately, especially in this correction over the last 3 to 6 months that we are seeing. ABB happens to be in our coverage. We have a hold stroke buy recommendation from a long-term point of view. A niche company in terms of the execution that it does in its sector. If you ask me for targets, then 8,800 plus is the target on ABB from a long-term point of view. And if you got invested in ABB at maybe 7,000, 7,500 or even at higher level, then this correction gives you an opportunity to add to the stock from a long-term point of view.
Coming in as far as ABB India then is concerned, tell you what, Kunal, I'll come right back to you because we do have an investor whose name is Rohit writing to us about Natco Pharma. He's wondering if this is a good time to buy. What do you think?
That's exactly the point which I made, Shreyanshi, that these are times where you should look to avoid stocks just because they've fallen by 30-40% and they may start to look very attractive. You have to wait for a point where these stocks come into a recovery phase, because it's always better to buy confirmation rather than buy anticipation in markets or especially in these phases of markets where gauging the bottom also becomes a very tricky kind of a scenario. So I would suggest that just wait out for a point. It's always okay that you buy these stocks maybe 5-10% at a higher price rather than buying the exact bottom, because you want to buy these stocks with an expectation that whenever you are looking to buy these names, you could probably expect maybe a 30-40-50% rally or maybe a CAGR return if you're a long-term investor. So I would suggest to just wait out and tweak your strategy as I discussed earlier.
Right, point taken, Kunal, by the confirmation and not the anticipation. But with that, it's time for us to slip into a short break. Don't go anywhere, we'll be right back with some more stock queries. Welcome back. You're tuned into Buy Now Sell Now, where we are taking you through all the stock queries that you're sending us. So coming to you now, Gaurang, this is a person called Shankar who's writing from Tuticorin. He says that please suggest, from October he's been holding IRCON. He's given a couple of names, PSU names, IRCON, IRCTC, IRFC and RVNL. It's been, obviously the market is falling. He wants to know the future for these stocks. Should he hold it? Should he exit? Should he, hold them for a longer period of time? What should be the strategy for these PSU names?
Give a brief, I'll restrict my comments to the sector, Indian Railways, and his portfolio as of now, whatever names you've told me, seems to be skewed more towards the Indian Railways. So all these are PSU stocks as we know it. All of them had a dream run, and then we are witnessing a correction in railway related stocks as well. As far as budget was concerned for railways, I think whatever has been laid down in terms of capex, new connectivity, running of new trains, whether it is passenger or dedicated freight corridors to be opened up, we remain positive on the sector. I won't be able to give you a buy, sell and hold on these names that you mentioned, but these are all those companies which will grow if Indian Railways have to grow, and which it has to grow. The point is, what is the time horizon which you get invested? So as I was referring to the defense sector, you need to have at least 3 to 5 years time in case if you invest in either cap goods engineering or defense or railways, because that's the kind of time they will need to execute the order book. And the biggest turnaround for Indian Railways is resolving the last mile connectivity, which the Honorable Minister has also spoken about. So these are all strong stocks within the sector. But unfortunate thing is they had run up, they are correcting. They will take longest time to recoup the lost glory.
Kunal, we've already talked about a select few counters, at least from the pharma pack, but what do you think about Aurobindo Pharma? Because Rajneesh from Mumbai is writing to us, holding on to 60 shares, buy price is 1,467 rupees. He's wondering what he should do with his holdings at this point.
See, I think you can continue to hold on to the stock. Of course, you've purchased at a slight higher price, but I would suggest that I think closer to 1100 mark, the stock is finding good support in the last 1.5 odd month, and I think from January so far, the stock is trying to test the levels of 1100, 1150 as a support, and every time it manages to retest those levels on the downside, it sees a very strong bounce back. So I'm expecting that this could probably be an indication that we are now tapping into a major support point or a demand zone for Aurobindo Pharma. If there is, in case some bit of recovery into the stock price, I would suggest that maybe about 1250 levels is where you can look to average out, because that's where you would probably get a confirmation that the stock has formed a strong base at the 1100 territory. But buying on higher levels, especially at a point when the stock confirms a breakout, would be a strategy I would recommend for Aurobindo Pharma.
All right, Aurobindo Pharma on the charts, but coming to you then, Gaurang, this person wants to know about, Lakshmi from Hyderabad wants to know about Swiggy. Now, she has 40 shares of Swiggy and she's bought it at 430 rupees. She's a long-term investor. Can she hold the stock for another 2 years? Now, there's so much of competition in the quick commerce space that, every quick commerce players, whether it's Swiggy, whether it's Zomato, their profitability has been impacted by that, and we saw that in the Q3 numbers. Going ahead, if it is likely to increase only with Zepto coming into the picture, what is your view on Swiggy, or Swiggy for the next 2 years?
Like I mentioned, on Zomato, we're positive. We have a coverage. On Swiggy, we covered the stock during the IPO not too long ago. And we had advised or recommended a subscription in Swiggy's IPO from a long-term point of view. So if you're a long-term investor, stay invested in Swiggy. There are going to be a lot of challenges, not only Zepto, but I think Amazon is also going to come. There are some couple of other players who are wanting to jump into this foray of quick commerce. The thing is that these two companies, that is Zomato and Swiggy, they are the legends in this sector. Whether the competition will disrupt from a short to medium term point of view, I don't have any doubt. It will definitely disrupt. Whether they will be able to maintain their base and increase it, well, it looks like, because both these companies have a strong capex plan and venturing into the tier 2, tier 3 cities, and even to certain extent semi-urban and rural India. So there is a huge subscriber base which will need to be serviced, which is right now unserviced. Long term, yes, we expect these two companies to do well.
Got it. Thank you so much, Gaurang, for that take coming in. As far as Swiggy is concerned, Kunal, very quickly before we wrap, I just wanted to quickly get your take coming in on Hikal Logistics, because Deepesh from Mumbai is asking for a fresh buy recommendation on this one.
Yeah, I think you can go ahead for a fresh long on Hikal. The stock seems to be at an attractive price point of 325 to 340 levels.
All right, thank you so much, Kunal and Gaurang. Thank you so much for taking the time out and joining us. With that, we have come to an end of Buy Now, Sell Now. Thank you so much for tuning in. Shreyansi and I will take your leave. Thank you so much for tuning in. But don't go anywhere. Stay tuned to ET Now, because market action continues.